Under pressure. That's our topic for today's Backstage Pass. Well, stocks are mixed here at midday, but mortgage bonds are up. It's the second day in a row that mortgage bonds are up and showing a little bit of resilience. Even though we're still trading right now, we're trading in a sideways range finding area, but still we're going to take the lift. It's a welcome lift. Mortgage bonds are up 42 basis points at the time of recording. The 10-year yield is down about 11 basis points, trading at 4% at the time of recording. The national average for a 30-year fixed rate mortgage, well, that came in yesterday at 7.15%, but if mortgage bonds continue on the tack that they're on right now, we could see that dip under 7%. And in news today, so the Federal Reserve Bank, even though they're independent, they are coming under some political pressure. They received a letter from one of the ranking members on the Senate Finance Committee, and they're starting to come under some political pressure to stop hiking the Fed fund rate. Well, as a result of some of this pressure, there are some folks that are out there that believe that the Fed is going to raise the Fed fund rate in November, raise it again possibly in December, and then just simply leave it at that elevated rate to help tame inflation. Now, the things that we know the Fed is looking at as far as their decision-making process, well, one of the things is the PCE data. That's coming out this Friday. That's the Fed's favorite measure of inflation. So on Friday, we'll get that data. And then next week, they're meeting, and we expect to see a Fed fund rate hike next week. But in November, later in November, we're going to get the October reading for inflation. And we do expect that October reading to show a decline in inflation. That's what we're expecting and hoping. So that will definitely factor into the Fed's decision-making process for the Fed fund rate in December, and their meeting in December, and going forward into 2023. And we also got new home sales. This is pending signed contracts on new homes. New home sales fell in the month of September by about 11%, but this actually was better than what was expected. It was expected to be down 13%. And year over year, well, new home sales are coming in down about 17.5% year over year. And we also got some data from Redfin, and this data has to do with contract cancellations for the month of September. So in the month of September, 17% of contracts on existing homes were canceled, and that's the month of September. And that seems kind of high, maybe even kind of alarming to some people, but when you go back and look at the same time period last year when rates were low and the market was on fire, we had contract cancellations at a rate of 14%, so we're kind of actually in an average range for contract cancellations. And also some other data from Redfin about price drops. 22% of homes in the month of September showed a reduction in their listing price. Well, this is probably from homes that were just priced way too high, priced out of the market, sellers trying to get top dollar. As a matter of fact, the average sale to price ratio was about 99.2%. And that means that kind of shows us that, hey, homes that are priced reasonably in the right range, and comparable to everything else that's around it, well, those homes are moving fast. And as also, 42% of homes still had multiple offers on it. So there's definitely some resilience in the housing market as well. And lastly, we got Mortgage Bankers Association application data from last week. Overall application volume is down 69% year over year. Purchases fell 2% last week, and they're down 47% year over year. The average rate for a 30-year fixed mortgage last week ended the week at about 7.15%. It's the highest it's been in 21 years. And then lastly, refinances week over week, they were flat, but they're down about 86% year over year. That's all the news that we have for today. We'll bring PCE data as it comes on Friday and a few more data points that are coming out tomorrow. But hey, for now, don't forget, stay positive, have a great day, and we'll see you tomorrow.